Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. Today we are here with Peter Behnke of Gold Royalty Corporation. Peter brings nearly a decade of financial expertise to Gold Royalty, having been a key member of the team since 2020. He is a CFA, CPA, and has been instrumental in the mergers and acquisitions, as well as investor relations. Peter, thank you for your time, and thank you too for your efforts and work on behalf of shareholders such as myself and viewers of this channel.
Yeah, Steve, thanks for having me. Happy to be here to talk today.
Yeah, so am I. I've been looking forward to this. Okay, tell us about yourself and how you got started in the business and with Gold Royalty.
Yeah, so financial professional, as you mentioned, and joined the Gold Royalty team after a career in accounting and M&A consulting. And was employee 1A, as Dave likes to put it, shortly after the company was founded by himself and Amir Adnani in 2020. We then took the vehicle public in 2021, and it's been fairly rapid growth over the last 3 years since then.
Okay. Let's do overview of financials, market cap, debt, cash, enterprise value.
Yeah, so currently as we sit, cap structure is 169 million shares outstanding. Share price today is around $1.50, so close to $250 million in market cap. Debt right now, we have about $25 million drawn against our credit facility, and we did a $40 million convertible debenture financing late last year to fund the Borborema investment and the recent Vares investment. So two cash flowing assets funded partially by debt. Brings us to a total of about 65, enterprise value closer to 300 million.
Okay, all right. And what does GROY's cash flow look like for 2024, 2025, and 2026?
Yeah, so on the back of the Vares acquisition, we provided updated guidance earlier this year. So we're looking at $14 million in revenue this 2024. But in 2025 and 2026, we're seeing a full year benefit from Vares, from Borborema, from Cote entering production here this quarter. So on analyst consensus estimates, we're looking at 20 to 25 million in the next couple of years.
Okay, so 14 mil for this year, 20 for 2025, 20...
Yeah, and I'd note that's at a $2,000 an ounce gold price as well. So we've seen that be much higher in the past quarter, and we've got that full torque to the commodity as well with our revenue profile. So I'm optimistic on the potential for us to have a strong year, but that's our official guidance currently.
Okay, and so let's talk about your flagship projects. So we got Canadian Malartic, Cote, Goldstrike, and we just got Vares. Canadian Malartic, Cote, and Goldstrike are all probably 30-year deposits. Let's start with Canadian Malartic.
Yeah, Canadian Malartic, largest asset on our books in terms of business value, book value. But it is an asset that's still really ramping up, maturing to that full run rate as an underground mine. And we really benefit from the underground future of Canadian Malartic. We have a 3% NSR over a large portion of Odyssey, which is what they're coining the underground future of Canadian Malartic, and specifically Odyssey South, Odyssey North, and the East Malartic deposits there. Now those deposits, while they're transitioning to underground over the next several years, really kick in towards 2028 to 2030. That's where we see a major step change in our revenue profile from Canadian Malartic. So it's a meaningful contributor now, but the future is a few years out there. And then as you noted, 20 plus years of reserves ahead of it at Canadian Malartic. At Cote, as I mentioned, entering commercial production in Q3 of 2024, later this quarter, and then ramping up to get a full year of production in 2025. That'll be Canada's third largest gold mine. We have a 0.75% NSR over the southern portion of the pit. So that's phase one of the Cote pit. We're expecting an earlier payback. The mineralization is near surface on the southern edge, so that benefits us as the royalty holder there. Again, as you noted, 20 plus years of potential mine life at Cote. And then Ren is one that we're very excited about, but within Barrick's overall portfolio, it doesn't get as much coverage. Odyssey is the flagship asset for Agnico Eagle. Cote is the flagship asset for IAM Gold. Within Barrick, the second largest gold producer in the world, our royalty covers a smaller underground extension of the overall Carlin complex. And the current resource there is just shy of 2 million ounces, 7 grams per ton. Great deposit, but 2 million ounces within the overall Barrick portfolio is a very small piece of the overall asset base. We've had a team down on site there earlier this year. Barrick's tracking towards a pre-feasibility study in 2026, and then we're quite confident that we'll see this asset enter production shortly thereafter. So fueling our growth in the midterm, call it the back half, towards the end of this decade.
Okay. All right. And on, so that was Goldstrike. On Cote, so IAM Gold had this is the beauty of royalty companies, is that they were not on time. They were double budget. And how much did that cost? I guess other than a delayed paycheck, the cost to shareholders was nothing.
Yeah, over a year ago, they updated their guidance and said production would be in Q1 2024, not Q4 2023. So we saw a few months of delay there, but the doubling of the CapEx had no impact on our returns as our royalty investment. We just care if the ounces are coming out of the ground and then what the gold price is.
Yeah,
It's a great example of equity interest in IAM Gold could be challenging given those capital cost blowouts, but us as a royalty holder, if the technical merits are there of the project, then our return profile is intact.
Yeah. Okay, let's talk about Vares. So we got a lot of questions on that. So Vares, just go over it generally. Okay, so we've Gold Royalty Corporation has been, like the name suggests, a gold royalty, and now we're branching out into copper. So we went from almost 100% gold royalties. Now we're branching out into other metals. Just give us an overview of Vares.
Yeah, so this is our second copper investment. So we did have a smaller investment in Cozamin, a high-grade underground copper-silver mine. And then similarly, Vares is actually a polymetallic deposit, so primarily zinc and silver with some lead and gold as well. And then copper is a smaller portion of it, and we acquired a 100% copper stream. So we're buying 100% of the copper from the Vares project. Given the byproduct credits at Vares, this is an extremely low-cost mine. They're producing silver at less than $8 an ounce cash cost. So
wow.
Very high-quality asset and a very proven operator here in the team at Adriatic. So those were two areas that gave us a lot of confidence in this asset. With regards to branching off into copper, as you say, I think it's viewing our portfolio in terms of we had a lot of gold. We were almost 100% gold. And if you look at the other royalty and streaming companies within the sector, you can absorb some base metals into the portfolio and still be considered a precious metals investment. We'll always look to maintain that 75 to 80% minimum as precious metals. But the balance of the portfolio, we would look at potential high quality base metals, hard rock assets. Where you won't see us divest or look into would be more exotic metals, whether that's lithium, uranium, rare earths. Not that we don't think there's an investment case there, but that's not our team's area of expertise. Whereas a lot of our management and board have extensive experience in nickel, zinc. David Groffalo used to run Hudbay, one of the larger copper producers in Canada. So it's an area that we know, and we're also quite bullish on that commodity as well. What it really brought us, and one of the critiques we had heard, and as I mentioned with Odyssey, great asset, really ramping up towards 2028 and 2030.
Yeah.
And the cash flow multiple of the company was relatively higher. We needed to bridge that gap to seeing that future growth come online. And this was an asset where we saw it didn't just have that incredible value, incredible upside, but it was massively accretive from a mid and near-term cash flow and revenue per share basis. Where we see a lot of upside at Vares is not just on their base case 800,000 ton per annum feasibility study, but they're actively pursuing ways to expand the mining rates there to 1 million or even 1.2 million tons per annum as early as 2026.
Okay.
If you look at that upside case, where the grades could be, we see this as a very accretive deal across all metrics. So we're quite excited by the asset. I think asset quality comes first and foremost in this regard, and similar to those other cornerstone assets, 20 years of mine life based on reserves alone, with an incremental 50% of total resources that aren't in that reserve mine plan.
Okay, all right. And so with this acquisition, I think before this acquisition, it was like 95% of Gold Royalty Corporations was in gold. Is that about right?
Yep.
And the other was in silver and copper.
Yep.
What percentage are we at now? What's the breakdown?
Yeah, so on consensus estimates, so looking at net asset value, it's about 88%, I want to say, gold.
Okay.
With about 10% copper and 1% silver.
Okay.
Or 1 to 2% silver or others. So it is still predominantly a gold-based investment. And then I'd also note from a jurisdictional standpoint, this does bring Bosnia into the mix, but we're still over 80% Quebec, Ontario, and Nevada as the anchor of our portfolio. So it's an area that we also had questions. Are you guys looking at new jurisdictions to expand into? But we did a lot of due diligence and gained a lot of comfort on how well Adriatic as an operator has done, not just driving forward the asset, but establishing that social license and having a very good reputation in country to drive forward this asset.
Okay. All right, so questions, Bob and Patrick. We're asking about the Vares acquisition. So this says $6 million a year in revenue, assuming an 18-year life of mine at $50 million investment. The internal rate of return is, he says, just okay. Is the company betting on higher copper prices for this deal?
No, I wouldn't say we're betting on copper prices. I'd say we're bullish on where copper could go, but it's not something that drives our valuations, whether that's a gold investment, a silver investment, or a copper investment. We'll look at long-term consensus pricing, we'll look at forward curves, we'll run different scenarios, but what ultimately drives our valuation is that long-term commodity price. Swings in the spot price are not going to massively change how we're driving our models.
Okay.
With regards to the return being just okay, I think a $6 million per year, uncertain how it's being modeled, but that'll be looking at very much a base case for the production profile, and I'd assume sub $4 copper. I think if we see consensus copper is getting closer to north of $4, or it is still around $4, and those expansion potentials I mentioned earlier, the potential for higher grade mineralization, increased mining rates, mine life extensions given the total resources that are not currently in that 20-year mine plan. And then this deposit remains open along strike and at depth at Rupice. So the potential to expand even further beyond 20, 30, 40 years, these polymetallic deposits typically have a very long mine life. So it's that technical asset merit that we see a lot of upside in. So if you're going to say we're betting on anything, it's betting on technical merit, and that's something we're quite confident in.
Okay. Yeah, I saw in your report you averaged $4.25 a pound per copper to do your due diligence. And I asked Rick about this and Adrian Day, and they said, yeah, they had to put 18 years, but the likelihood is that this mine will last 25 or 30 or possibly more. So, okay. And they also say, let's see, I get and applaud the diversification of the acquisition, but the high copper price and dilution make this one much more costly than previous acquisitions. How will you restore faith in your shareholders that dilutions won't be a recurring issue?
Yeah, it's a good question, and I think one that I've received over the last several weeks. I noted on the copper price, fluctuations in spot not going to drive our decision making. In fact, looking at spot, it makes the deal look even more attractive. With regards to how we're evaluating opportunities going forward, we have to see significant value in an opportunity to be confident to go to shareholders. We've been very disciplined with our script. This is the only equity raise we've done since our IPO in 2021, and it was with a fully defined use of proceeds. If we don't see value, we will not be diluting shareholders. We're focused on acquiring assets that improve the metrics of the company on a per share basis. And we're quite confident in the potential for Vares. And while the recent share price performance has obviously been frustrating in the fullness of time, and I think in the relatively near term, by delivering on the cash flow from this asset, we think that can turn around relatively soon.
I think so too. I've literally doubled down. So we'll see if I'm right or not.
Well, you and many members of management recently as well. So
okay,
yes.
Good deal. All right, Lazar wants to know. He says, why should investors take the additional risk to invest in Gold Royalty Corporation rather than your competitors, say Franco-Nevada, Wheaton Precious Metals, or Royal Gold?
Yeah, good question. I think it all comes down to relative valuation and where you can see continued growth and upside within the equity. Great companies, the majors within the royalty and streaming sector, but relatively fulsomely valued. They're all closer to 2 times net asset value, and they're all quite large. It's difficult for them to continue to grow. If you look at the recent Vares deal, $50 million acquisition for Gold Royalty, Franco-Nevada would have to make a $5 billion acquisition to be the equivalent size for them. And frankly, there aren't $5 billion acquisitions within the sector right now, not on a pure royalty and streaming basis at least. So we have that ability to continue to grow, the ability to re-rate from where we are today closer to 0.6 times net asset value. And I think as this cash flow delivers, that'll be the natural re-rating closer in line with our peers. But beyond that, the scope for further consolidation, the scope for further scale, there's a lot of room to run to cannibalize and absorb some of that multiple as we continue to grow the company. But I note, while we look to achieve that scale, it will always be conscious of per share value.
Okay. Hart wants to know, he says, what was the increased cost in Q4 of 2023 attributed to?
I'd have to look back at the specifics of Q4 2023. But year over year, normalized, we saw a major decrease in 2023, about 37% decrease relative to the same period over 2022. End of year sometimes has some one-time costs, some year-end investor relations. Typically Q1 and Q4 are more heavy marketing periods. But for the most part, keeping our costs down has been something that's been very conscious of Andrew Gubbels since he joined in early 2023 as our CFO, and has done an exceptional job of. So with regards to where costs are, we've got a very fixed cost structure. It should be relatively flat, and the only things that would be variable would be any due diligence associated with opportunities.
Okay.
If the team's traveling, and often that'll get capitalized into the asset as well if we're successful in making an acquisition.
Okay. All right. How are you and management compensated? Shares, options, salary?
Yeah, so
How do you get paid?
the senior execs are majority equity compensation. I want to say it's over 60% of their total comp is tied to equity, and most of the compensation there is also tied to performance. So share price performance, asset performance, portfolio performance is a major part of how the senior executives of the company are incentivized. Say below that, and the remaining employees, while we are a small team, equity is still a major portion of how all employees are compensated within the company.
So you have a vested interest in seeing the share price do well?
Absolutely, and we've all participated within the IPO, within our recent equity raise. So it's not just being granted equity. We've actually opened the checkbook and put money into the company as well, putting capital at risk. And that's really a testament to where we believe the stock should be trading relative to where we sit today. Okay.
What's it trading at, like you were mentioning, Franco-Nevada is 2 or 3 times their net asset value. Where is Gold Royalty?
So right now I think we're $1.45, $1.50. On consensus estimates, that's closer to 0.6 times net asset value.
Oh.
So 1 times NAV is closer to $2.60 a share right now.
Yeah.
Which would kind of be a bare minimum in a lot of cases relative to other small cap peers. But you've seen the likes of a Cisco, Triple Flag, those larger, more mid-tier companies getting closer to 1.5 times NAV, and Wheaton and Franco still north of 2 times. So it's and that premium to NAV is really a reflection of that exploration upside, the optionality in a portfolio, the potential growth that is difficult to model on the reserve mine plan, which is going into the present value of cash flows. It's that mine life that says it's 20 years but is going to be 30 or 40. That's where you attribute that premium.
Yeah, yeah. Mm-hmm. Okay, and insider ownership. What percentage is available to retail What big players that own this? What's the insider ownership?
Yeah, so insider ownership of individuals is approximately 5%, and then Gold Mining Inc., our former parent company, is at 13% now, so controlled by the insiders is closer to 18. Our second largest shareholder is Behncke. They're around 5% now, so over 20% in terms of strategic holders of the stock. Beyond that, we've been able to attract more institutional capital into the story, groups such as Queen's Road Capital out of Hong Kong, Taurus Royalty Funds, which we also joined in a cooperation agreement for looking for new opportunities. Then the likes of Orion, Commodity Capital, more specialists within the industry also coming in. We're still quite widely held, say around 60 to 70% still retail, and we're quite liquid as a result of that. We're trading close to $2 million a day on the NYSE American, so very liquid relative to peers. Just coming back to one point that I made in terms of the premium and the duration of the portfolio, I think one thing that does get lost in looking at NAV is, as you look at these longer dated assets, the value in the future can get discounted to nothing. You look out past 20 years with a discount rate, there's no value there. Whereas if you look at a short mine life, it's easy to value it fully. And I think that's something that Gold Royalty suffers from a bit, is we have these very long duration assets. We never have to put another cent in. We don't have to go and acquire new assets to fill the gap. All these assets are going to produce for multiple decades, which really does differentiate us from many of our small cap peers.
Yeah, I think for the short term, this has really just been an opportunity, especially then, we're just talking with Teo about copper, and I think copper is going to be a slam dunk. I think it's a no-brainer. You got to throw your hat in the market and be patient, and these things don't pay overnight, but when they do, it's a lot of fun. It's a lot of fun. Okay, biggest unanswered question facing Gold Royalty Corporation.
Biggest unanswered question facing Gold Royalty. I think it's there's two, I would say. I think you look at the 20 some odd assets that are cash flowing and developing, and you can build up a model. You can see what the value is there. I think the unanswered question for a lot of investors, and even for us, which is exciting, is okay, all this exploration optionality, how do we look at that? How do we value it? And in my view right now, you get it all for free, but there's no holding cost there. There's no liability associated with it. It's all free upside. And I think there's a few gems. We know there's several gems within the advanced exploration bucket where there's underlying resources, and those will move forward. But even for us, seeing early exploration stage assets surprise to the upside, it's more of a venture capital model on that end of our portfolio, where we only need a few of those to really hit, and the rates of the return are practically infinite, as we're not paying to create those early stage royalties. So I think that's something that all investors get for free, a portfolio of exploration royalties that could really enhance the value of the portfolio. And it's something that we like to highlight as kind of a ETF basket of exploration investments, early stage prospecting, because stock picking on the early stage end of the mining industry is incredibly challenging to create value through. So this is a great vehicle to kind of get that exploration side, and is, yes, an unanswered question, but an unanswered question with no downside.
Yeah. Okay. And what could go wrong for Gold Royalty Corporation? What's a possible headwind? What could go wrong?
Yeah, I think it's similar to what we saw at Franco-Nevada earlier this year. We do have single asset risk, and potential trouble at any single asset hurts the company. I mean, we don't want to see that happen. But we are diversified. We don't have a ton of concentration risk in any single asset. And importantly, we've partnered and consciously focused on acquiring exceptional quality assets with exceptional quality operating partners. Agnico Eagle, Canadian Malartic mine, we're very confident in the risk profile of that asset. Similarly with Cote, Ren, and now Vares, the asset quality has always been first and foremost, and that significantly de-risks any potential delays, issues with those assets in our view.
Okay, yeah, so with Franco-Nevada, you're talking about Cobre in Panama, where the government saw fit to shut down 5% of their GDP for whatever reason. I'll take the other side of that bet.
Yeah.
Double down on that one.
Yeah. And it's not doing anything to help where we're at from a copper supply standpoint
God,
and
no.
the commodity price as well. So no, it's interesting decision there. But I mean, that's an example. Incredible company, Franco-Nevada,
Yeah.
single asset. It did hurt their valuation, obviously. I think
Yeah.
for us, given so much of our business is within Canada, the USA, we're very de-risked from that type of risk in our portfolio.
I think so too. And what's exciting about this to me is that I feel like, and maybe I'm wrong, but I feel like we could be getting in on the ground floor of a future Franco-Nevada or a future Wheaton Precious. 20, 30 years from now, we may be sitting here talking, and you're in with the next Franco-Nevada.
Well,
we shall see.
We'll take it one quarter at a time
Yeah.
for the time being, but I think that's always been a focus of the deals we've done is having that long-term view. High quality assets, sustainable production profiles. This isn't just a financial engineering of marginal assets that have 3 years of good cash flow ahead of it.
Yeah.
It's been a focus on gaining that exposure to high quality assets that provide you the optionality to the technical merits, but also that commodity price upside in the long run. You zoom out and you're modeling these assets at $1,600 gold. Royal Gold actually does a great job of illustrating this, looking at where consensus prices have been. If you made investments in the early 2000s in gold mines, you were pricing them at $500 an ounce.
Yeah.
Here we sit at $2,400 an ounce.
Yeah.
And those long life assets provide that torque and that optionality in the long run.
Yeah. Alrighty. Well, thank you very much, Peter. Any final thoughts? Anything you want to get in?
No, I really appreciate being able to give the opportunity. Any investors can always reach out directly to us, info@goldroyalty.com. David or I are very responsive and always happy to get back or speak directly to investors as well.
Okay. Well, thank you very much. I look forward to it. I wish you the best of luck. We are literally betting on it. And thank you for tuning in. Support the show and share this with anyone that you think needs to hear it. It's probably your buddy. They can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.